In this video, we're going to talk about Hyliion. If you're considering buying Hyliion shares in your portfolio, then please keep watching this video until the end, because it'll cover many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $11.70 and closed at $11.49. The lowest point at which it fell to was $11.28, and the highest point it rose to was $11.81. Compared to the current price action, its 52-week low was $7.69, and the 52-week high was $58.66. The current trading volume of Hyliion is 2.4 million shares, compared to the average volume of 4.9 million shares. The current trading volume of Hyliion demonstrates that the market is still on the sideways, waiting for the stock to get out of the region it is in to get a clearer idea of where the stock may be going. There seems to be a sector-wide phenomenon whereby the trading volume of all stocks seems to be lower than their average value, except for specific volatile situations that are bound to individual companies. For now, Hyliion shares are in the middle of a consolidation phase with a tendency upward, but a very fragile one. Now, let's take a look at the difference between the company's market cap and the enterprise value. Basically, the market cap is the sum of the price of all shares that are currently traded, and the enterprise value is the value of the company's assets once the debts are paid off. We can see that the market cap of the company is $1.9 billion, and the enterprise value is $1.5 billion. The difference between the market cap and the enterprise value shows the degree of speculation between what the company is actually worth and how much the market is willing to pay in the present for its future. In the case of Hyliion, the difference is actually significant. There is a difference of almost 25% in the two values, which means that the premium investors are willing to pay is still significant. Now, let's talk about the number of shares the company currently has and the shareholder composition as of the latest data available. The total number of shares outstanding is 172.3 million shares. In the total float, insiders hold 37.75% of them. We should also look at the percentage of shares owned by institutional investors. In that case, they hold 22.74% of the total amounts outstanding. There are 24 million shares that are being shorted, which represent 20.3% of the shares traded. So overall, it's an encouraging sign to see that almost 60% of the total equity is in the hands of either institutional investors or insiders. Institutional investors are known to be less emotional and more rational when making investment decisions, and more importantly, because their portfolios are so diversified, they often have the luxury to wait for companies to go through difficult periods due to conjunction reasons, such as the case for Hyliion right now. Insiders also have vested interest in a company so that they will never just liquidate their shares like this unless there is something very wrong with the company, or if the stock is severely overbought. Either way, I don't think that this is the case for Hyliion at all. From a short-term perspective, the recent price action of Hyliion suggests that the market is slowly regaining confidence in the stock. Note that I didn't say regaining confidence in the company, because these are two different things. On one hand, the company, Hyliion, is advancing as it should, developing its new products and expanding its production facilities, and so on. It even got included in the Russell 3000 index. All these signs show that in terms of its operations, Hyliion is progressing as it's supposed to. But in terms of its stock, it's most likely followed the trend of the entire sector and went through a massive sell-off from late 2020 to nowadays. But the recent price increase did give me some hope that the pullback is now over and that it'll go to higher places in the next few months. One of the signals that the market has bottomed out, at least in the short term, is the double bottom on April 22nd and on May 11th. Since then, the bottom of $7.50 level has no longer been tested, and the price bounced off. Now, even if our time frame is often measured in months, not in years, let's take a look at the long-term tendencies of the company. The stock is currently very low compared to its former glories, because it has been 6 times higher than where it is now. On the other hand, the logical conclusion that I make is that the stock has a far higher probability of going higher compared to where it is now. For long-term holders, the question is whether the stock will be bigger a few years from now. What is for sure is that the stock will have a very different set of fundamentals compared to where they are now. My personal feeling is that they will be higher, they will be better, and the company will be bigger. But it also has a certain probability that is material of getting driven into the ground. So this is why our position should take into consideration of that possibility. For now, I think that we should anticipate this scenario and make sure that our position has some exposure in Hyliion in order to benefit from the rising tide, but not too much so that if the tide puts the company under, our portfolio sinks with it. The last element to consider would be the overall market sentiment in the financial market. The current reality is that investors and money managers are not willing to blindly follow companies into throwing their money in them anymore, like much of 2020. There are many reasons why investors are now shying away from innovative and disruptive stocks. Some will say that they were overpriced, that they were overbought, or that they were relying on selling dreams instead of having solid financials. But the real answer is probably a much simpler one. At one point, some people began to lock in their profits. That simple decision created a significant crash in the company prices, not really because those companies are necessarily bad, but that they just had more sellers than buyers. This triggered a torrent of sell-offs from February of this year to nowadays. The overall tendency at the moment is that those stocks are now bottoming out. But investors are generally speaking more skeptical, and only the companies that have robust financials or ideas may survive. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.